This episode is brought to you by Accenture. When your advertising operations fall out of sync, everything else follows. Spotify and Accenture are working together to reinvent the rhythm of ad sales, using automation, analytics, and smarter workflows to simplify campaign delivery and access better data across the business. The result? Less time spent on operations, more time connecting brands with the moments and fandoms that matter most. Learn more at accenture.com/Spotify.
The new LinkedIn Hiring Pro can't undo your last hire, the no-show. Who set you back because they didn't show up on day one, or day two, or ever again. And now your product launch is delayed because you're talking to alien abduction podcasters to track them down. But LinkedIn Hiring Pro can help make sure your next hire sticks. In fact, businesses who use LinkedIn are 24% less likely to reopen a role in the next 12 months. Hire right the first time with LinkedIn Hiring Pro. Post a free job today at linkedin.com/quality.
Welcome to Learn Finance 101, where we break down the key historical events within finance and economics. In this episode, we turn our gaze to the present and near future. This is the story of how artificial intelligence, once a niche field of academic research and sci-fi speculation, has exploded into the dominant narrative driving global markets. Since the launch of ChatGPT in late 2022, AI has become the single largest force in stock market gains. Nvidia, the company at the epicenter, has seen its market capitalization surge from under $1 trillion in early 2023 to over $5 trillion by late 2025, making it the world's most valuable publicly traded company for a time. The Magnificent Seven stocks, Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Broadcom, have accounted for a disproportionate share of S&P 500 returns, with AI-related spending projected to reach $2.5 trillion globally in 2026, according to Gartner forecasts. The excitement is palpable. AI promises to revolutionize productivity, automate tasks, unlock new scientific discoveries, and create entirely new industries. Venture capital has poured hundreds of billions into startups. Hyperscalers like Microsoft, Google, Amazon, and Meta are spending hundreds of billions annually on data centers, GPUs, and AI infrastructure. Yet whispers of a bubble have grown louder. Valuations are stretched to levels reminiscent of the dot-com era. Nvidia trades at multiples that require flawless execution for years. Skeptics warn of overinvestment, diminishing returns, and a potential AI winter if promised breakthroughs fail to materialize in revenue and profits. In this episode, we will walk step by step through the origins of the AI boom, the forces inflating the bubble in 2023 to 2026, the current state of valuations and spending as of February 2026, the signs of froth and risk, the counter-arguments from bulls who see a new golden era, the potential triggers for a correction or crash, the likely economic and market impacts if it bursts, and the enduring lessons for investors navigating this moment of technological promise and peril. Let's begin by stepping back into the early 2000s, when AI transitioned from lab curiosity to market obsession. The groundwork for the AI boom was laid over decades. Neural networks and deep learning concepts date back to the 1950s, but practical progress accelerated in the 2010s with advances in computing power, GPUs, massive datasets, and algorithmic breakthroughs. The 2012 AlexNet victory in the ImageNet competition marked a turning point. Deep learning suddenly outperformed traditional methods in image recognition. By the mid-2000s, companies like Google, Facebook, and Baidu were deploying AI at scale for recommendation systems, translation, and advertising. The real explosion came with generative AI. OpenAI's GPT-3 2020 demonstrated large language models could produce coherent text. Then ChatGPT launched publicly in November 2022, capturing 100 million users in 2 months, the fastest growing consumer application in history. Suddenly, AI was no longer abstract. It was accessible, useful, and mesmerizing. People used it to write emails, code, generate art, summarize documents. Businesses saw potential for automation and innovation. Investors saw dollar signs. Markets reacted swiftly. NVIDIA, the leading maker of GPUs essential for AI training and inference, became the poster child. Its stock rose more than tenfold from late 2022 to late 2025, pushing its market cap past $5 trillion in October 2025, the first company to achieve that milestone. The Magnificent Seven stocks, Apple, Microsoft, Alphabet, Amazon, NVIDIA, Meta, and Broadcom, drove most S&P 500 gains in 2023 to 2025, with AI-related spending projected to reach $2.5 trillion globally in 2026, according to Gartner. Venture capital poured hundreds of billions into AI startups. Hyperscalers announced capex plans exceeding $600 billion for 2026 alone. The narrative was intoxicating. AI would boost productivity, automate routine tasks, unlock scientific breakthroughs, and create new industries. Analysts like Mary Meeker, former Morgan Stanley, now Bond Capital, published reports comparing AI's potential to the Internet's impact. CEOs from Jensen Huang, NVIDIA, to Satya Nadella, Microsoft, spoke of AI as the next industrial revolution. The new economy rhetoric returned. Old valuation rules no longer applied because AI would drive exponential growth. Daily life reflected the mania. In Silicon Valley, engineers and founders became overnight paper billionaires. Venture pitch meetings ran non-stop. Accelerators churned out AI startups. Media coverage was relentless. CNBC, Bloomberg, and podcasts hyped AI breakthroughs. Ordinary investors opened brokerage accounts to buy NVIDIA, Palantir, or AI-adjacent stocks. Social media buzzed with AI will change everything posts. Even non-tech companies added AI-powered to press releases to boost stock prices. Valuation stretched to extremes. NVIDIA traded at multiples requiring sustained hypergrowth. The Magnificent Seven collectively traded at forward PE ratios of 28 to 30 in late 2025, above historical averages but below dot-com peaks. The S&P 500 forward PE reached 22 to 23, elevated but not at 1999 to 2000 levels. Concentration risk was extreme. The top 5 stocks accounted for 30% of the S&P 500, the highest in half a century. By early 2026, cracks appeared. NVIDIA's growth slowed from triple-digit rates to only 50 to 60%, projected for 2026 to 2027. Hyperscaler capex announcements continued, but raised questions about returns on investment. Some analysts, for example Deutsche Bank, Goldman Sachs, warned of overvaluation and concentration risk. Peter Thiel and SoftBank sold NVIDIA stakes. Michael Burry disclosed shorts on NVIDIA and Palantir. Reports suggested 95% of organizations were getting zero return on generative AI investments despite billions spent. Yet the bulls argued this was different from .com. AI delivered real productivity gains: coding assistants, customer service chatbots, drug discovery tools. Revenue from cloud providers and chip makers was surging. Unlike many .com firms, leaders like NVIDIA and Microsoft had massive cash flows and profits. Spending was backed by cash-rich hyperscalers, not speculative debt. The technology was already useful, not just promised. The debate rages in 2026. Is AI a bubble on the verge of popping, or the early stages of a new golden era? Valuations are stretched, concentration is extreme, and capex is enormous. But revenue momentum remains strong, and the underlying technology is advancing rapidly. Triggers for a correction could include slowing growth, disappointing earnings, rate hikes, geopolitical shocks, or regulatory crackdowns. If the bubble bursts, expect sharp declines in AI leaders, venture capital winter, startup failures, and broader market volatility. But if adoption accelerates and returns materialize, the boom could continue. The lessons endure. Technology can transform economies, but hype can blind investors. Fundamentals eventually matter. Bubbles burst, but transformative innovations endure. The emerging AI bubble isn't just a market event. It's a test of whether humanity can harness a powerful technology without repeating past excesses. Thank you for listening to this episode.
Experience a membership that backs what you're building with American Express Business Platinum. Enjoy complimentary access to the American Express Global Lounge Collection and apply to find out your welcome offer, which could be as high as 300,000 membership rewards points. American Express Business Platinum. There's nothing like it. Terms apply. Welcome offers vary, and you may not be eligible for an offer. Learn more at americanexpress.com/business-platinum.
The right window treatments change everything. Your sleep, your privacy, the way every room looks and feels. At Blinds.com, we've spent 30 years making it surprisingly simple to get exactly what your home needs. We've covered over 25 million windows and have 50,000 five-star reviews to prove we deliver. Whether you DIY it or want a pro to handle everything from measure to install, we have you covered. Real design professionals, free samples, zero pressure. Right now, get up to 50% off with minimum purchase, plus get a free professional measure at Blinds.com. Rules and restrictions apply.